I'm Charlotte McLeod with investingnews.com, and here today with me is Lobo Tiggre, CEO of independentspeculator.com. Thank you so much for being here. Great to have you.
Always happy to be live with Charlotte McLeod.
Yes, really happy to have you here. And of course, we are catching up from our last conversation in March at PDAC, and it is quite a change since then, I think.
Oh, wow.
Yeah.
Short time, big changes. Wow.
Very big. So lots to talk about. And for gold, so if we think back to that time, that was when the gold price was just beginning to move. And I think we weren't quite sure yet if that was going to be a real breakout. So I want to start there and ask if its move upward has surprised you. Has the price activity been what you expected?
Yes. Well, this isn't the first time I've been asked this because, I made a big deal about 2023 was the year of uranium. 2024 was the year of gold. So people are asking this, oh, gee, you were right about gold. What next? This isn't, a breathtaking original thing, but the answer to your question is the reasons why I was bullish on gold have not yet happened. So partly I'm saying is, being right for the wrong reasons is not being right. So no, this isn't what I expected. The good news is I still think I'm right. I still think those reasons, the recession, the rate cuts, even without recession, the global macro context, global South buying gold, all that stuff, is extremely bullish for gold. And that's still ahead of us. That's still, the catalysts that I was expecting to bring gold to where we are now haven't happened yet. So starting from where we are now instead of 2000, I think makes it embarrasses me to put numbers on it, but it's a very positive direction for gold. What's really interesting to me, and this is me arm waving, this is me pounding the table, this is my equivalent of that, is that the fact that I'm still bullish for all these reasons ahead of something that's already moved gold, that's really interesting to me. I think I've called it a new buyer in the space, and people are saying, oh, it's China. But the last 2 months, China hasn't reported buying any gold at all in the central bank. And yet here we are still very near nominal all-time highs. So it's not just China. Oh, it's India. Well, I think it's not so simple. I think we're starting to see not just inevitable becoming imminent. We're at Rick Rule's conference, and that's the Rick Ruleism. Don't confuse inevitable with imminent. I think we're starting to see something Rick has talked about with you and others many times, this global allocation in portfolios to gold historically over the decades has been around 2%. And recently it's been around 0.5%. Like Barbarous Relic, it's a pet rock. The pet rock school of economics has won, it seems, the gold debate, and people just don't want no gold anymore. I think that what we're seeing is that changing. And maybe it doesn't go back to 2%, but if it just goes back to 1%, that doubles the investment demand for gold from where we are now. So if I'm right, just look at the headlines since gold pulled a hockey stick this year. It wasn't a new war. The latest war was last October, right? It wasn't the central banks from the global South buying. They've been doing that since the Fed weaponized the dollar. And it clearly wasn't just China. It didn't buy, according to China anyway, it didn't buy any gold the last 2 months. And here we are. So this is a theory. I can't prove it, but this is my theory. I think we're starting to see this reallocation that Rick has been talking about for a long time. And instead of going, inevitable or even imminent, I think we're seeing it happen now. And if that's right, I think that's a really powerful mover for, not just gold, but the gold stocks too.
Okay, so this is going to be a little bit silly, but now when people are asking you, okay, you got gold right, what's next? Is the answer gold again?
Actually, yes and no, because of how I just said it, right? My reasons for expecting gold to go up haven't happened yet, and I think they're still there, right? And I think the latest labor market data, that sort of thing, supports my view. American exceptionalism doesn't mean we get out of jail free card. Right, the consequences are still there for tightening and that. So I think that's happening. I think the long and variable lags are finally coming down. There are a number of indicators. The SOM numbers getting a lot of headlines, even in mainstream press. I like Jeff Gundlach's indicator, the 3-year long-term moving average of unemployment crossing the current unemployment line. 100% successful track record over 80 years of predicting recessions. And it's a coincident indicator, by the way. It's not, oh, this crosses, so we will have a recession. It's this crosses, we're in recession. And some time from now, people will say, oh, yeah, we were in recession. Kind of Danielle DiMartino Booth style, right? So I think that's what's happening now, not just inevitable, not just imminent. I think that's happening now. If I'm right, yeah, gold is still there. But the difference answer is silver is there as well. And silver has been, and I get hate mail for this, but it's just the facts, right? Silver has been more closely correlated with copper than gold in recent years, over the last year in particular, So its industrial side is clearly a more powerful force in the market, and it's a mistake to just ignore that and say, no, silver is money. Okay, yes, silver is money, but it's moving like an industrial metal, and you ignore that at your risk. So I think it's very important that it has now changed. That market dynamic has changed, and it's moving more strongly with gold again as a monetary metal should, which kind of comes back to something has changed in the market that I was saying earlier. So I think it's fantastic, not just good. I think it's fantastic news for silver and long-suffering silver bulls out there that it's acting as a monetary metal should. So this isn't just a theoretical thing. Like I did not have silver on my shopping list at the beginning of this year. It was gold stocks. And, at the beginning of this year, uranium was $106, and I was looking for a pullback. So it wasn't even uranium. It was just gold at the beginning of this year. So the update now is I've added silver as well. And I know you'll go there, so let's jump into it. Uranium, we've had the correction that I was looking for. It's found sort of support. It's dragging along. It's a boring, trading range. But that boring trading range is in a price that makes gobs of money for the better uranium miners. And it makes the better uranium projects work, and they're getting built. So we don't actually need uranium prices to go up to make money in the uranium space. You just need to pick good companies that can make money and deliver for shareholders in this environment. But I do think uranium prices will go up. So the fact that it's corrected, and the fact that people are bored, here we are at Rick's show, and he likes to say, I love hate, right? When something's hated, that's the time you can buy cheap. I don't think uranium's hated. Again, the thesis is too obvious. The supply and demand fundamentals are so strong that even mainstream media are picking up on it. That's a pretty low bar. Not INN, of course. I think that's as close as we're going to get. If hate isn't an option anymore because of the upside is too obvious, then boredom is a great opportunity. I think for anybody that missed uranium last year, this is the time to be paying attention. Look for the companies that have projects of real merit or are making money, but are on sale, or at least relatively on sale.
Okay, so you have given me a number of points to follow up on. I will go first to silver. So I was going to ask for the Darth Silver take on $30 per ounce for silver. So I think we kind of got that. So when you say it's back on your list, have you already found companies to buy, or you're currently looking?
Currently looking. Deep sigh. The problem isn't that there aren't any, great silver projects out there. This last cycle, enough money has gone into the ground that, there are some legitimate silver discovery or silver primary. Of course, silver is always a byproduct. Or even in a silver gold mine, there's still going to be gold in there. And most of the so-called pure silver mines, they're really galena mines, lead sulfide or sphalerite mines with a lot of silver in them. But anyway, it's not that there's no great discoveries or projects out there. There are some, but most of them are in basket case countries going the wrong direction. And so it's, with all due respect to our host here at the Rural Symposium, I'm just, I guess, genetically allergic to political risk. I hate it when mines get nationalized or commodities get nationalized or mining bans get put into place. And these sorts of things are on the table in our neighbor to the immediate south, where unfortunately many of the world's great recent silver discoveries are located. And other silver jurisdictions, Bolivia, Peru, they're deeply problematic. So finding, I've got a whole team now. We're looking for this. It's not that there's no silver stocks out there. It's not there's not on sale, but one that ticks all the boxes that I can be really excited about. I bought one since I started buying silver stocks again. I've only found one that's made the grade, and but we're looking. And due diligence ongoing, rock kicking ongoing. I just came back from seeing a half a dozen companies in the Yukon. My team is fanning out into the field as we speak to see what else we can turn up.
Okay, so on the hunt for the correct silver play to look at. Okay, so just also going back to the hard landing scenario. So we talked in March, you're still team hard landing. I'm sure that you still are. One thing that was, we polled our audience before we came to this event, what do they want to hear about? And one of the questions that came up was this hard landing, when will it arrive? And so if I'm understanding correctly what you said earlier, we're in the recession now, we just haven't realized. So when do you think that, I guess, realization, the actual hard landing comes through?
Okay. All right, so 2 parts, I guess. One is, yes, what I'm saying is the hard landing is happening now. And if you look at some of these headlines of people talking about downsizing their lives or downgrading their budgets or shopping down, and it's interesting, it's not just the lowest rungs of the economic ladder having to go from, the supersized Big Mac meal to the just plain old McDonald's hamburger or something. It's higher and, upper middle class people now shopping at Walmart instead of Trader Joe's. That sort of thing, that's happening now. And I think this is part of it. If I mentioned the Gundlach indicator, as I call it, and try to give credit to the Bond King because he's the one who identified it. Remember, I said it's a coincident indicator. So that doesn't mean the line's crossed, there's going to be a recession. It means the line's crossed, we're in a recession that will be recognized. So when will the NBER recognize it? Usually it takes some time. You can take more than a year. And by the way, it's not just like, sometimes the BLS, BEAL, these guys, they'll go back and retroactively revise a whole swath of things that are supposedly finalized numbers. Like we get an initial read and a second read and a third read of GDP and that sort of thing. But like a year later, they can go back and revise those. Oh, by the way, we were wrong. We had birth-death model, whatever. We had these estimates and that they were wrong. The real numbers are much lower. So that, I think... Maybe not to get political, but the election is an indicator of what I'm talking about, the reality, like this is happening now. Team Biden doesn't understand why, inflation's coming down, it's less than 3%, we're almost to our 2%, magic bullet goal, unemployment is still at historic lows, everything's great, why doesn't Joe get any credit? It's those evil Trumpy guys there. But no, it's not Trump, it's the reality. When people go to the supermarket and they have to buy the smaller package or they shake the package and realize it's mostly air, they realize that their quality of life is diminished. So, I think it's anecdotal. You can't prove it. I can't give you, here's the statistic. But the math that we do have, like the Gundlach indicator and so on, I think the hard landing is happening now. When they acknowledge it, who knows? Certainly not before the election, would be my guess. But the takeaway, forget the theory. The takeaway is, if I'm right, now is the time to act while the gold stocks are still relatively unloved, and silver, right? If I'm right, it's still too early to get into industrial commodities, your oil and your copper, which I both like, but will not buy until that capitulation comes in because they'll get whacked. There's consequences to this if I'm right. And sorry, just real quick, if I'm wrong, it's not like oil and copper and everything is going to go to the moon tomorrow and you'll miss the boat. If I'm wrong, there'll still be time to buy into multi-year bull markets for industrial minerals as we, go into the next economic boom cycle. And if I'm wrong, the Fed is still talking about cutting rates, which is bullish for gold. So what I'm saying is, if I'm wrong, you might miss some buying opportunities, some opportunities to buy low right now, but you won't miss a lifetime opportunity. And there's no huge downside to focusing on the monetary metals for now. Even if I'm wrong, they should do well. If I'm right, they'll do fantastic. If I'm wrong, they'll do well. And then you'll have time to load up on some of the other stuff once it's clear that I'm wrong. And of course, if I'm right, well, off to the races.
Okay, so in that hard landing scenario that eventually we will realize, do gold and silver stocks, do they go down with everything else that might be? So could there be,
So, no, will be the short answer. Well, but there's a thing to tease out here, in that people often will say, "Oh, it's a recession, so there's a market crash," and everything. Those are not the same thing. A market crash and a recession are not the same thing. Sure, a recession or realization, that capitulation, realization of recession, has historically caused market downturns. But the Fed has been training the markets to see bad news as good news. Right? This isn't new. You've talked to any number of people about this, right? So I could see where that capitulation, this realization, oh my gosh, we really are going into a recession, are in a recession. That could make the S&P and the NASDAQ hit new, even higher all-time highs, because the assumption will be, and they wouldn't entirely be wrong, the assumption will be easier monetary policy. The assumption will be, recession, the Fed's going to loosen. And so that could actually work out in their favor. So where I'm going with this is, don't assume recession means, we're going to have a market crash. If we do have a market crash, yes, everything gets whacked, including gold and silver, including the gold and silver stocks. But like 2020, very sharp V-shaped bottom, 2008. Silver took longer to recover in 2020, so that's the Darth Silver thing. But the answer is, if we do get a crash, then I think that's a buying opportunity. That is absolutely a dip to buy in gold and silver, monetary metals. Like industrial metals could take a longer while to recover, depending. But I don't expect that. My outlook, my base case is not actually a market crash this year. My base case is the data weakens, and at some point people realize, holy beep, we really are looking at recession, and then the money helicopters fly again. So it's not like we go through the ringer. It's like it becomes obvious that we're going through the ringer, and then the powers that be step in. And that's hugely inflationary. At that point, we will have had that shock, and I think oil and copper and industrial minerals will be cheaper. So you'll have a cheaper buying opportunity plus the upside, and that's what I'm looking for. Monetary metals, I think, stay strong throughout. And then the one outlier, of course, is uranium, which, unlike oil, is more recession. Like we've talked about this before, and I've always said, well, nothing's recession-proof, but uranium's recession-resistant. Well, I've actually done the math now. I looked in the last 4 recessions. Uranium went sideways or up in 3 out of 4 of those. So that's actually a pretty good track record. That's math now. It's not just a feel. That's like uranium is a much better bet than oil ahead of a recession.
Okay, that's a very good pathway toward more uranium. So I'll go there now. It's interesting you're mentioning people are a bit more with it now, which I can sense as well among our audience, but we're going to talk about it anyway because I think it's important. But there are things going on, and I think the big piece of news, you can tell me if this sounds right to you or not, the biggest piece of news since we last talked is this ban on the Russian uranium. So interested to get your thoughts on significance there and the possibility of a counter ban, which has not yet emerged.
Right. So, well, first and foremost, I'm not the uranium insider. Like I cover uranium, I buy uranium stocks, I'm invested, but Justin can talk more about the ins and outs of how these things work. And I'm not promoting Justin, and I'll go pay for that, but just acknowledging he knows more about this than I do. But you're asking sort of like a broader strategic question, and I think that's fairly unknowable. Putin loves to surprise the world, but is it conceivable that Putin could say, screw your ban, I'm just going to not sell anything to anybody I don't like, right? Just what's the Russian response? I think that's a reasonable question to ask, and I don't know the answer, but the answer is not going to be, oh, hey, let's help the West out with their nuclear reactors. Like whatever the answer is, it's not going to be pro-West, and it's not going to help Western utilities or Western industries or whatever. So we'll see what happens. But even if he does nothing, the ban is sort of a self-imposed cutting our own leg off, because there really aren't a lot of other suppliers. I mean, the French, a little bit, Canada's working on it, the U.S. is working on it, but we're not there yet. The hope is that the U.S. users have stockpiled enough that the U.S. production of, this isn't just mining, this is enriched uranium, right? So that U.S. production will come online, and we will be able to meet our own needs by the time the utilities really need it. That's, we'll see. But the other thing is, like, this ban is, well, it's a ban unless we really need it. Like, if you can say, oh, we have to have this and there's nowhere else, then you can get an exemption of this ban. I don't know how much of a ban that really is, if it's a ban unless we really need it. But that comes to your question. Like, suppose like we're thinking, oh, it's not an emergency, it's a ban, but, if we really need it, we'll get our enriched uranium. But suppose that happens, and your, Duke Energy or whoever it is goes to Russia to say, oh, hey, we got an exception and we need some more enriched uranium. And Putin says, ha ha, right? Good luck, not getting it here. Then things would become pretty interesting. And deeper than that, I would leave it to Justin, but I would just remind the audience that enriched uranium is several steps off from the mine product. It wouldn't necessarily have an immediate impact on the spot price, which tends to impact the share prices, which we as stock speculators care about. I mean, just look at right now. The ban went from being talked about for a long time to we actually have the ban now. And what has that done for spot uranium? Bupkis. Like literally nothing. It has gone sideways during this entire, voting, signing, the ban being put in place has done nothing for spot uranium. So this may be one of those things where the storium might be, a little bit hyped up, and let's look at what's happening with the actual uranium. And in my view, there is simply, this lull in the market is the closest you're going to get to that opportunity to buy low, sell high on hate. Hate's off the table. Boredom is your next best thing. If you're interested in this sector, now's the time to be looking at, where are the compelling value propositions here.
Okay, very good. And I am due for a conversation with Justin, so it's a good reminder to have him back. I think we can wrap it up there for now, unless you had any final thoughts that you wanted to leave people with. I know before we had turned the camera on, you were saying how we always talk about things like the economy, et cetera, and really that's kind of not your focus. You're out there doing due diligence. So any words on that note?
It is important to come to conferences like this, because you can talk to CEOs, ask them, simple but important questions. How much is that going to cost? How much money do you have? Things like that. And if the guy's going like this, I don't know, I got to ask my CFO, that's valuable data, and you're never going to get that from the corporate presentation. But honestly, not everybody has the opportunity to go and kick the rocks the way I do, and the field work that I do. And I have a team now, and I love it. It's just fun. I go to places and just nobody goes. I've been to China 6 times or more, and I've never even seen the Chinese, Great Wall of China, because that's not what I go there for. But I've seen amazing things that nobody else has seen, because I'm off in the hinterland kicking rocks. The answer to the question is, I see opportunities in the sector. I see it being one where selection matters, due diligence matters. You can and should come to conferences like this to help your due diligence process. And if you need more help, then maybe you could look into me as your due diligence guy. But even just getting off your butt and coming to a conference like this is already more than 80%, 80-20 rule. Like, you're already in that elite group of people who actually bother to try to get answers and dig deeper into the questions, and that puts the odds in your favor.
Okay, well, I think that is a very good note to end on. So thank you so much for coming by to talk.
Thank you, Charlotte.
Of course. And once again, I'm Charlotte McLeod with investingnews.com. And this is Lobo Tiggre of independentspeculator.com. Thank you for watching. If you like this video, make sure you hit the like button and subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below.